Picture this, you open up your investment dashboard and see that your portfolio balance has gone down by over $15,000 just in a mere 1 week. Well, this is actually what happened to me. Last week when I provided my portfolio update, our account balance was showing a positive unrealized profit of around $1,000. And this week, after just a mere 7 days or so, the portfolio balance has gone down to an unrealized loss of over $15,000. For many people, this might be disappointing and in fact might also cause them some feeling of panic. Luckily for me, I've been investing in the stock market for quite some time. And in fact, 2023 has been an amazing year for many investors. The year started off very strong after a disappointing year in 2022, and most of the major indices were up considerably. For me though, at some point, I would say close to middle of the year, I started kind of restructuring my portfolio. I used to have many different ETFs standalone, and for most the part, they did quite well. But I decided that I want to kind of simplify my strategy by focusing a lot more on an all-in-one asset allocation ETF, which is XEQT. Given that and the timing of my purchases, I bought the shares of XEQT for the most part closer to their 52-week high price, which is why now that the stock market is showing some signs of pullback, particularly in the last week that we had it, it's only natural that my portfolio balance is going to go down. To help illustrate my point, the main holdings for XEQT includes these 4 different ETFs: ITOT or iShares Core S&P Total US Stock Market, XEF iShares MSCI East and Far East IMI Index ETF, which the second one gives us exposure to the international developed markets, the first one to the US market. XIC is the third holding, iShares S&P Toronto Stock Exchange Cap Composite, as the name suggests, gives us exposure to Canadian market. And lastly, XEC, iShares MSCI Emerging Market, as the name suggests, provides us exposure to emerging markets. Now, if you look at the performance of these ETFs, for XEQT as an example, within the last week, it's down by 2.6%. If you look at more closely at these underlying ETFs, XIC, which is for the Canadian markets, was down by close to 4% over the last week. ITOT, which is for the US total stock market, was down by close to 2.6%. As for XEC, for emerging markets, it was down by close to 1.35%. And lastly, for XEF, which is for developed international markets, it was down by 1.76%. That's the beauty of having that diversification, because if you only hold on, for example, to one market like US or Canada, you are not going to know exactly how they're going to perform. And different times, might be doing better than the others. At least through a holding like XEQT, we are getting a more diversified exposure to these different markets. Now, that brings me to a look into our dashboard that we have for our portfolio. And for those of you who might be interested to take a look at this dashboard on a more ongoing basis, I have shared the link transparently in the video description, and you can check out exactly where things are. A few things I would like to bring to your attention. Since last update, you do notice that the total number of XEQT share has gone up by around 400 shares. So we managed to buy 400 additional shares of XEQT since the last update around a week ago. There has not been a change to our shares of VT or VTI. We're still maintaining the same amount that we had. Our cash balance sitting in our market brokerage accounts have gone down because we've used the funds to buy shares of XEQT. You would also notice that the unrealized return is now at negative $15,434, and the amount expected for dividend income has grown a little bit, given that we've added more shares of XEQT. In terms of the geographical asset allocation, we are hovering close to that target levels that we have. For USA, we have a targets of 50%. We are currently hovering around 47%. For international, we are hovering around 24% with a target of 25% there. As for Canadian markets, our target is at 20%. Currently, we are showing the exposure of around 23%. And lastly, for emerging markets, we have a target of 5%. We are hovering very close to that. Majority of our unrealized returns is because of the shares of XEQT. It is actually currently down by 3.5%. Also, compared to last week, now shares of VT are negative 2.1%, and shares of VTI are still showing a positive return of 1.7%. Given that I started investing a while ago, our total amount of net deposits is at $407,794. Still, we are up overall by 12.4%. Now, you might be wondering why I'm not panicking. What is really the mitigation strategy here? For my wife and I, we are still young, and that's why we are not really counting on this portfolio as kind of a tool to tap into. We don't need these funds I would say at least for the next decade or so. And that's why we are not worried about the short-term ups and downs of the portfolio. Even in saying that it's short-term, we are comfortable if, let's say, this drags on for a longer period of time. We are comfortable with that. We are using gradually our savings as we work, as we earn income, and redeploy that to buy more shares of the high-quality ETFs that we have in our portfolio at a hopefully even lower price. And in fact, that's why on a shorter term basis, we don't mind these market pullbacks whatsoever, because we are in this for the long term. And if that's the case for us, we would probably even appreciate the fact that the market is showing us those opportunities with a pullback, because now we managed to buy more of these shares at a lower price than what we had previously bought them. This way we can try to dollar cost average, bring our average purchase price for these shares to lower levels, setting us up for success for the many, many more years to come. The other reason that we're not worrying too much is that for both my wife and I, we have our full-time jobs and we're making income through that. On top of that, we have a separate emergency fund built. So it's not the cash portion that you see in this stock brokerage accounts. That's only a minimal amount that we've already deposited to our stock brokerage and is used for investing more. We do have a separate cash account that mainly we are investing to both Tangerine and EQ Bank. Those are the two types of account that we mainly use through their savings account based on some either promotional rates that we get in our high savings account, or using EQ Bank mostly for our day-to-day kind of bill payments and other type of transactions. I wanted to intentionally make this video here and share it with you today, because I know it's always easy to share a portfolio when the value of our holdings are up and positive, and you're showing like, yeah, everything is great. But the truth of the matter is, not every day it's going to be like that. In fact, there are so many times in the lifespan of an investor that you're going to be presented such a kind of hands. Moments like this, I would say, are good chances for us to test whether we are having our portfolio based on the right level of risk tolerance, and whether we're comfortable with the market volatility and can we pass the sleep at night test. For me, I absolutely know that I am super comfortable with it. And I think it was not like this since the beginning. I only kind of grew this level of tough skin over the years. I never forget when I first started investing in the stock market, I started with Wealthsimple managed accounts. And I believe it was the first months or so, as I started investing and putting in some money into my accounts, I started noticing that my value of portfolio was going down, and I was really panicking. In fact, I even emailed Wealthsimple and asked them, hey, what's going on? This is supposed to be a stock market investment account. It's supposed to go up. Now, reflecting back on that and on my reaction, and even some of the posts that I read on Blossom, I see that same type of mentality for many new investors. And I don't blame folks that are in that spot, because, when you're new to investing, you don't know much. But I really encourage you to be patient. When it comes to investing in the stock market, you have to have your kind of time horizon set. You have to have your right level of mindset and risk tolerance. As long as you have all of those in place, and anything else that happens in between is just noise. So you don't have to worry about it, because why would you bother about it? Let's say if the value of your accounts goes down, dips drastically, if you're not going to touch that, and that money is going to sit there over time, is going to grow, let's say over the next 10 years. Any drops or even increases in the value of your portfolio wouldn't really matter, because you're not going to touch it until, let's say, the next 10 or 15 years. That's a good kind of reminder for me, and also for many investors, for us to be mindful of that. And that's exactly why I wanted to make this video, to showcase this situation that I'm in, and how I approach this, and how I kind of internalize it for myself, and how comfortable I am with it. It definitely takes time, patience, and that longer term vision for you to be comfortable in situations like this. I hope you found this video beneficial, and hopefully it provided you some reassurance as to the ups and downs of the market, and how you can make peace with it and be comfortable with it, and how you can try to actually maximize opportunities like this. If you have any question, be sure to leave me a comment, or here on YouTube or on Blossom. I always read all the comments and provide my response to the best of my ability. I really appreciate all of your feedback and thoughts, and I hope to see you all next time.